US dollar slash the Canadian dollar. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So, here we have the pair 6-ish% here from the 52-week low, and we have been through approaching minus 5-ish% pullback. So let's just jump into the charts. This is, weekly data points, big picture. We do see that it moves in these time cycles. We recently formed this very nice double bottom here, boom and boom. And we are seeing a rally. When we go to the daily data points, then you could certainly make a pretty good case that this looks like an inverse head and shoulders pattern, which is a bullish technical pattern. And we also have, this horizontal breakout situation. So technically it looks good for the, a strengthening of the US dollar. So here we have the weekly data points. Now we see that RSI has been higher during previous rallies. Also the distance from the 20, 50, 100 and the 200 week moving average has been, much higher in the past. So there's more like fuel left. We don't have any really extreme readings. Maybe you could argue that, this distance from the purple 20-week moving average, historically it's on the higher end of the spectrum. But there have been times where we have been higher. So that's the only thing that makes me a little bit cautious, but nothing like really dramatic. When we go to the daily data points, and we look at the distance from the red 200-day moving average, the 100-day, 50-day, and the 20-day moving average, then in this case you do see that distance from the 20-day moving average, it is on the higher end of the spectrum. RSI has though been meaningfully higher in the past, so you could certainly make the case that here on the daily data points there's more fuel left potentially in the rally. Okay. The statistical correlation here with the S&P 500 is only a mere 2% positive, so very weak, almost no. When it comes to the 10-year yield, though, we do have a minus 49% negative correlation. So that is definitively something to be aware of. Looking at, the weekly data point, which is, the bigger picture, and then we do have a minus 81% negative correlation with the S&P 500, but almost no correlation with the 10-year yield. The seasonality. So, looking at the last 5 years, from September to October, November, there is strengthening. The last 10 years, clear increase in strength for the dollar. And over the last 20 years, from September to October to November, clear increase in strength. December has a tendency to be weak. However, the strongest month for the dollar is January. So you could argue that the coming period from October into January, it's historically strong for the US dollar in this pair, which obviously is beneficial to a bullish thesis. And when you consider that in the context here of the technicals and the weeklies and the daily data points, then I think that you could make a pretty decent bullish thesis here for the dollar. As I have said before, there's a lot of complexities when it comes to the US dollar because it's a major reserve currency. It's used in all kinds of ways. And there's all kinds of complexities relating to the euro-dollar market and the $1.3 quintillion derivatives market. Okay. Let's do some in-depth correlation studies for this pair. So here the US dollar / Canadian dollar is in the background. And now we have weekly data points, and we look at it against crude oil. And you can see that there's a minus 74-ish% correlation with this pair and crude oil. So they do have a tendency to move a bit opposite each other. Hence, a rise here in crude oil statistically is likely to bring a weakening of the US dollar, which would be a strengthening of the Canadian dollar. Looking here at natural gas, we do have a minus 52% correlation. So it is negative, but not like viscerally negative. But it is certainly negative. When we look at the WT, which is the total stock market ETF, then we do have a pretty strong minus 88% correlation. So that is definitively meaningful. Looking at the dollar index, then we do have an 83% positive. Looking at the daily data points, and I do understand, of course, that statistical correlations is something that people could find boring, but this is actually one of the most important things to look at when you are considering any investment, because it's a really big deal whether to have any kind of idea really about what impacts your investment. So on the daily data points, there's only minus 19% negative with the crude oil, 30% positive with natural gas, though it's currently on the historical high-ish end of the spectrum. Minus 11% here with the total world stock market ETF, and a 70% positive correlation with the dollar index. So yeah, I think that there is more reasons to be bullish than bearish on this pair for the coming months.